everyone. Welcome to DFG Talks. On this occasion, we are very happy to have Chester from ETHA and James Wolf from DFG Group. Chester, how are you today?
Well, I'm doing awesome so far. Great weather here in Berlin. And I'm excited to speak to you guys a little bit about ETHA and just introduce myself so people get to know a little bit more the people behind the project.
Nice. Yeah, that is the objective of this chat. We want those who are not yet aware of what ETHA is or what DFG is and what they do and what they bring to the crypto ecosystem and to the community. So let's give them a taste of what we are, right? So James, how are you today?
Hello, everyone. Hello, Alex. Hello, Chester. This is James Wolf from DFG. So I'm doing pretty well. I'm based in Shanghai right now. So, happy to share anything related to, DFG and the Polkadot ecosystem with you guys.
Great. So let's start with you, Chester, please. So what is ETHA? Can you please, let's start with a basic explanation of what ETHA is and what does it bring to the Polkadot system, if you may?
Sure. So essentially what we built here is a yield optimizer. What we are doing is we are working on a layer above the underlying protocols. Currently, since we are built on Ethereum, so we are built on top of Aave, DYDX, and Compound. And what we are essentially doing is we are using data to do yield optimization in a cost-efficient way. So this would be the simple explanation, and I will elaborate a little bit more as we go, what we essentially do here.
Great, thank you very much, Chester. James, how about you? What is DFG? What does DFG do, and how does it contribute to the Polkadot ecosystem?
Yeah, thank you. And DFG is basically an investment firm in the industry for a long time. I started a company back to 2015. We basically have 3 different funds. The first is focused on the equity side. We have holdings, different assets, including Repeal, Block, Brave, LedgerX, Uno Coin. We started fund, active fund back to 2015. It's pretty early stage, so we just invest into different startups. The second is the layer 1, and layer 2 also token fund, which focus on basically all the assets on the protocol side, including Ether, Polkadot especially, and the others we have Solana, Avalanche, Near, a couple of others. The third is we established, which we started investment last year, is the Polkadot ecosystem fund. Basically, we have invested more than 25 different Polkadot ecosystem projects so far. We are both, pretty strategic investor into DOT and also different DOT ecosystem projects. So that's the third fund we established. So overall, we are a pretty, diversified. We have a diversified portfolio, but really focus on, a couple of, we have some CeFi kind of stuff, including LedgerX, Circle, which is pretty, good, doing pretty good right now. And we, on the DeFi side, on the, decentralized world side, I think we are focused on the Polkadot and its ecosystem. So that's basically what we are doing right now.
Thank you, James. Chester, I'm going to come back to you. You were talking about that you're built on Ethereum, that basically, you work with DYDX, you work with Balancer or on Compound, or you work with A, right? So I wanted to know what type of, let's say, I don't want to say weaknesses, but what type of aspects do you think ETHA can improve on, right? Regarding yield farming, mining, or what can you bring, right?
Yeah, sure. Yeah, I will elaborate a little bit more, like what our approach was when we initially started. So initially, when we started ETHA, we wanted just to build another liquidity protocol, such as Aave, DYDX, or Compound. However, through our research, we just realized that, first of all, there was like a lot of value that can be captured on top of all these protocols, since all these protocols offer essentially like the same asset that could be, for example, supplied or borrowed, but they had different interest yield. So this is what captured first our attention. And then we are also realizing that the gas costs were very different across all these different protocols. And we realized that there's actually more than enough value that can be captured. So we don't need to replicate already something that is already existing. And since maybe some people are aware that the interest yield updates every block. So what you are seeing as a user on the interface is not necessarily the current rate. So it's impossible actually for a user to really know, based on the number that you see on the screen, on the interface, where it makes the most sense to supply your asset. So to tackle all these factors, and a lot of people, of course, they don't really factor necessarily the gas cost within the yield that they will earn. So you have a lot of people that they don't take this into consideration. So we were focusing on all these different data points and came up with an algorithm that takes this into factor. And what we do here is we are working as well with the volatility timeframe of all these different protocols. Then we are using optimization techniques to do yield optimization. So based on the asset you supply, we give you the best way how to supply your assets. So we are not necessarily focusing on yield farming per se. At times, of course, when we are interacting with protocols that offer yield farming, this is where we have this yield farming component. However, so the way how we build our protocol is we can integrate any protocol. So we can integrate liquidity protocols such as Aave, Compound, DYDX. However, we could also integrate yield aggregators such as UN Finance and apply this methodology to do yield optimization. So our approach is not yield maximization at all costs, because we know the last few weeks and months, we have been seeing a lot of yield aggregators that have been unfortunately exploited. And this is not necessarily our approach. We are building solutions for risk-averse investors because we were essentially focused on building a solution for bigger players such as exchanges and banks to provide them yield optimization. Because you can think of this, if you see, for example, that Aave is offering 20% APY, let's say, and you have a fairly big position, like 20 million or even 1 million, by the time you supply the asset, your yields that you see will most likely dilute since the utilization rate goes down, And we take this as well into consideration when we do yield optimization. So we were focusing on that mainly with this particular product. And when it comes to Polkadot, down the line, we just realized that it's not we are coming at a time when we are building that it's becoming a bottleneck, gas cost. It's a huge problem and scalability. And we feel like Polkadot definitely offers a great solution to the problems we are facing in order to innovate and offer yield optimization, especially since they offer as well great ways to do cross-chain communication, etc. So, and this is also a strategic move for us because we want to capture, to be one of the first movers when going in the Polkadot ecosystem to offer yield optimization, So we have been also already in talks with some existing protocols that intend to build like money markets on Polkadot, just to make sure as well. So once they are ready, we can also start working on our algorithms and offer our solution. And of course, we closed some important partnerships that will allow us to use our Solidity code that is currently existing on Ethereum over in one of the parachains in the Polkadot ecosystem. And the idea is then to build another bridge from our end that would allow to interact as well with all these different lending protocols that are in the underlying parachains, that are sitting in the underlying parachains. Yeah. So,
Nice, great. Thank you very much, Jester. So you're basically trying to unite, right? All the positive aspects of, let's say, not only the platforms, but also on the base layer, right? You're trying to connect, the best aspects of both Ethereum and Polkadot, which are very powerful and have a lot of, let's say, promise when it comes to growth.
Correct, very correct. Essentially, in the initial stages, we will, of course, it will most likely be isolated. So our product is living in the Polkadot ecosystem and in the Ethereum ecosystem, because the problem is with, if we are building on a cross-chain communication with the Ethereum blockchain, I think it has a centralized aspect in the beginning that we don't necessarily want. So people can expect our protocol to live first on Polkadot and then on Ethereum, but we are also very open to discover some more EVM compatible chains.
Nice. Yeah, that sounds great. James, I'm gonna go ahead and go to you. What as an investor, right? Chester is commenting on this kind of constraints that we've seen due to the gas, rise in prices to create transactions, or the cost of each of moving forward with a smart contract. What brings you as an investor to Polkadot? Let's say comparing it to investing in Ethereum or in the Ethereum ecosystem. What can you say on that sense as an investor?
Sure. That's a good question. From our perspective, Bitcoin is good, Ethereum is good as well. Polkadot is better. So I guess Bitcoin serve as the with everyone believing it, basically with the super solid consensus. It's not necessary to be used as a payment tool, right? It can be digital gold. People can store the value through Bitcoin. So Bitcoin is there. Everyone believing it. That's good. That's the vision of Bitcoin. But what ETHA did and what non-Bitcoin crypto asset did is really you need to build an ecosystem, make sure your protocol is useful in the future, right? Ethereum is pretty successful about building a DeFi ecosystem. DeFi is probably the largest, but there's other ecosystem as well. But DeFi is really the real use cases and the real application on Ethereum so far. It could be NFT in the future, it could be others in the future, but DeFi is the one right now. You just check right now what is the TVA or locked on the Ethereum network. It's probably like more than $50 billion. That's a decent amount of money. I mean, I'm pretty sure the amount will go up, right? But previously, in 2017, it's interesting that scalability is the issue at that time. But it's interesting right now for this year, 4 years after the people raised that question, scalability is still the issue. They didn't solve it, right? Previously, they tried to solve it in kind of like I would say half centralized, half decentralized ways throughout different kind of a coin like EOS, like Tron, like others. But so far I don't think that's pretty successful. That's not successful, because you are breaking the fundamental consensus of the protocol. Work if you want a centralized service. Use Apple, Alibaba, whatever. Just use all the large enterprise right now. So far, Ethereum is still not going to fail to solve the scalability issue. Previously, there's not a lot of application which the problem didn't show up, but after CryptoKitty situation, then the problem become pretty seriously. About this year, it's really a serious issue. So at this time, you got all kind of application on top of the Ethereum network. If you don't solve the scalability issue, it's an issue. It's a big issue that prevents everything from moving forward. So Binance Smart Chain came out, Hackle came out. They just simply forked the code of Ethereum and try to, I think, doing it in a similar way. It's like, okay, I'm going to whatever, try to sacrifice a little bit about the decentralization, but make it faster, right? So that's the way to solve the problem. And so far they are doing okay, but we think they are still compete with Ethereum or work together with Ethereum at the same level, right? It's not, solving the entire issue. So there's two ways basically to solve the problem we face right now. The first is, Ethereum solve the problem by itself, right? There's like a layer 2 solution, whatever it is, like Starkware, Off-Chain Lab, a lot of, great project working on that. It may come out and solve the problem. And, once you have that, then you can use a layer 2 solution, then the problem will be solved. And or for the next step for ETHA 2.0 is move to proof of stake, right? So these are two step. One, solve the problem. The second is make it better, transfer from proof of work to proof of stake. This is one option. The other option I see in this industry is moving to Polkadot. It's like you are using a more fundamental a protocol with better version, with proof of stake from an issue. It's not like a transfer. You need to transfer from proof of work to proof of stake, and your design is actually more fundamental. You are protocol. People can issue a pair chain and work in build stuff in the Polkadot ecosystem. So there are two options here for you to solve the problem. Is Ethereum solved by itself or Polkadot, which is more fundamental. So what we think in this, thing is like, okay, Ethereum is good. They may solve the problem. The ecosystem is still big and remains there. But what if, Polkadot become so successful in the future? It's probably a next level of crypto protocol, right? So it's not only solve the problem, but bring the industry to the next level. So there's a chance for Polkadot become super popular and dominant in the market in the future. So that's why we are super excited and strategic, into this ecosystem. I'm not saying they're 100% Polkadot will reach that level, but there's a chance for Polkadot to be there. So that's enough for us to become so excited and strategic into this one. So that's my comment about the question. Thank you.
Yeah, and you could also say, James, that due to the maturity of the market, right? It's not the same. You were mentioning it. It's not the same when we were discussing scalability 3-4 years ago, even 2 years ago. Then from 2020 and onwards, right? The maturity of the market has changed. The dynamics within the market, within the projects or the concepts being presented, such as ETHA, right? There's new concepts and new ideas coming out, which will in turn attract new users, and it will solve new use cases. Therefore, the scalability issue it becomes even more important. Am I right?
Exactly. ETHA, I think is definitely a pretty a good project in the DeFi ecosystem. Within I'm pretty sure the DeFi ecosystem will be much bigger. The scalability issue is it's interesting. Scalability is the one. It's not an issue, then it's okay. But when it's the issue, it will prevent everything from moving forward. So you have to solve it, right? But for DeFi project, it's okay for Polkadot is not there. There's other project you can use like Compound, others, but scalability you have to solve it. So that's pretty much interesting for this topic. But for ETHA, that's in the DeFi ecosystem. That's another thing I think. I can talk later, but that's also another on the application level that's super important and necessary and fundamental to the DeFi ecosystem.
Yeah. So Chester, I'm gonna pass to you. We're talking about scalability as a great issue, right? It's very important. It's gonna, let's say, open the channel for users to come and go, and for users to be able to get on top of your platform. So when it comes to security, sorry, can you hear me?
Yes, I can.
Yes, I can hear you. You're breaking up,
So-
but I can hear you.
Sorry. So when it comes, we're talking about scalability, right? I'll repeat my question. We're just talking about scalability and the importance that it has when it comes to users and platforms being able to be used in the right way, in the way that they intend to. let's go to security, which is another very important issue. And you were actually mentioning it before, right? We've seen that security has been an issue, or at least a topic to discuss when it comes to DeFi. So what is your take on security, and how does ETHA, let's say, protect themselves from these issues that have arisen since 2020 and the rise of the yield farming and the yield concept?
Yeah, that's a great question. So one aspect is, of course, auditing. I mean, we got our protocol audited, and we are currently as well undergoing another audit that is currently conducted by CERDIC to make sure prior to launching on the mainnet that everything has been addressed. And of course, we made everything is publicly accessible. So we are welcoming as well independent audits and will reward them. So additionally to that, we actually in talks with some DeFi insurance solutions. And the idea is to offer it natively, natively. One way to cover these expenses internally so the user doesn't have to pay separately would be just to reduce basically from the earnings that they would normally earn. We would just take a portion and then cover automatically, basically the insurance costs. So this is, I think, two major points that we think how we could mitigate at least that all funds get lost. So one, of course, making sure that we have the audits and that they are battle tested prior to launch any product. And the second one would be the insurance. I think it's very important because if we really want the DeFi to grow, we have to, of course, solve the scalability issue that we currently have with the base layer. And of course, we have to make sure that there is some sort of security mechanisms when it comes to smart contracts exploitation. If these two major problems are not addressed, it will be very difficult, I think, to scale, and it will be also very difficult to offer a similar, I call it Web 2 experience when it comes to applications. Since, I mean, the user experience overall is still not there currently with Ethereum, with Web3 extensions, etc. Of course, there are some solutions out there, but they have as well security, they're kind of centralized, You have to trust certain parties that holds your private keys in a decentralized way. But yeah, this is my take when it comes to security overall. Mm-hmm.
Yeah, so and it's important to note, right, that security, just as much as scalability, is going to be a big issue once more adoption comes into the space, right? A recent report was saying that we have under 5% of the world using crypto. So we're still a long way for crypto to be adopted. And, especially we see it now in Bitcoin, right? Institutional investors are very interested in a way to diversify their reserves or even diversify their portfolio for clients. So, this service that ETHA presents, or this service that ETHA is bringing to the market, is going to be very important because DeFi is going to be the backbone. Let's say, James was commenting earlier, DeFi is going to grow. DeFi is going to be very big, and DeFi is probably going to be, one of the one or two main engines that pushes the market overall to grow, because it's offering solutions from the biggest institution to the smallest individual who may be unbanked, who a peer-to-peer connection, a lending platform such as ETHA will offer them the alternative to enter the market. Am I right?
Yes, 1000%. You're totally right. Correct with that statement. And of course, I think it's also very important, users or people like us, we are probably familiar with the whole landscape overall with, okay, where can I supply my assets? Where do I get X amount of yield? However, to expect a user to know where all these different platforms, I mean, we have almost every week a new yield aggregator or a yield protocol. It's impossible to keep up for the user. So these are also aspects that we are focusing on. You know, we build it on purpose, composable, in a way where we can upgrade as well the protocols we want to integrate. And that way the user can have actually always exposure to the ideal ways and the ideal platforms where the funds should go. And I think one point that is also super important that I should mention is we are working mainly with non-custodial wallets. So we didn't want to pool all users' funds in just one single contract. And then if there is a security exploit, that all funds are gone. So what we did is we are working with smart contract wallets for two reasons. One is you have a gas savings aspect as well, because when interacting with a new protocol, or let's say you want to swap a new asset on Uniswap, you don't pay the approval cost, the approval gas cost, since we are using smart contract wallets. And the second one is, of course, we mitigate the risk, since if we are using bigger assets, there will be an asset allocation that happens. So a portion will go to DYDX, a portion to Compound, and this depends, of course, on the response of the algorithm. So this is also actually an aspect when we're talking about security, where we kind of mitigate those risks, you know, additionally to the insurance solution that we want to offer down the line. But more will be announced very soon.
Great. Thank you, Chester. So James, I'm going to come back to you quickly. You know, we were talking about investors and adoption, right? So as an investor, as a big investor within the crypto community, what made ETHA an attractive project company, you know, virtual asset service provider, where you would place the trust and you know, assist, right? Because it's not only about money. Sometimes it's about communication. It's about assisting in you know, management, whatever, you know. So as an investor, James, what is your take on that?
Yeah, I mean, from our side, you know, I just think, you know, ETHA is super, you know, effective, and you know, we're gonna use it, and other people are gonna use it, other people are gonna need it. So that's why, you know, we think this is super exciting to us. From our perspective, you know, on the, you know, yield mining side, that, you know, I'm not sure about others. From our, it's a way of storing the cash, because basically we are going to mine different cryptocurrency or stable coin. You know, when we think it's a super, you know, so far we still have a, you know, smaller position of the cash to do the yield mining, like $20 million, something like that, because we are still, you know, super bullish on the market. So we are, you know, we didn't hold a lot of cash, but, you know, instead of letting the cash sitting on the balance sheet, we want to mining different kind of, you know, asset, right? So that's what we are doing. But if let's say Bitcoin goes 3x, ETHA goes 3x, then, you know, we think the market may be a little bit risky at that time. Then we will cash out more asset, more of the crypto asset to stable coin. Then we will allocate more stable coin to mining different kind of asset. That's our strategy. But if the market goes down, we may, you know, decrease our position in the stable coins, then, you know, buying a lot of assets. So that's our strategy, but other people may take other strategy, whatever. But what I want to say is it's different from like what we see in 2-3 years ago, that, you know, instead of, you know, holding an asset, you're just holding the cash. But right now there's a way for you to kind of try to use your token to mining other tokens, right? That's a pretty different story right now. So I think it just makes sense for almost everybody to participate into that journey, right? So that first of all, DeFi itself, yield mining itself make a lot of sense. Then, you know, what we think about this is like you know, there's, you know, it's like an investment. You're selecting different kind of project to invest, or, you know, there's not a lot of, you know, it's a public market, but there's a lot of project, but you need to select different projects to invest. So that need kind of, you know, a really, you know, institutional or professional people to guide for that, right? For example, on the stock market, on a secondary market, you really need, a lot of retail investors, they just allocate money, give it to hedge fund others to allocate their capital. Because they are professional, they know which one to invest, which one to select, right? On the investment side, we are pretty professional, making, investment in the Polkadot ecosystem, on the DeFi ecosystem. So that's our expertise and that's our skills. But that's not the skills, I think a lot of retail customer own, to be honest, or retail investor own. So they have to, and this is such a professional thing, right? So I guess, they are not going to know, okay, I'm going to mine this cryptocurrency, but that's not probably the best solution for his money, right? So I guess, either there's two ways to do that. The first is you just simply sign agreement with a centralized entity, investor like us. If we do the fundraising, right, for mining kind of fund, then you can give money to us. We charge you $220, like kind of like a management fee and a cut. Then we help you to do that. That's one way, a centralized way to do that. The second is the decentralized way. For example, then ETHA come into the place that, okay, there's a solution that will help you just use that solution, simply help you, okay, this is the best solution for your money. Then you don't need to, know what kind, digging into that, doing research, doing that, right? So that's the decentralized ways of solving the problem. And it's, I said before, it's a $15 billion TVL right now, but it goes 10x in the future. So just imagine, there's currently how much money is under the management in the DeFi world. And then, the decentralized solution came out, it's probably even better than a centralized solution, then it's definitely necessary there, right? And ETHA is working on both ETHA and Polkadot, right? So, and Polkadot, I don't see any, other solutions working on a similar thing. Then, in this ecosystem, when or Akala, Plasma, all kind of DeFi application becomes so big in the future, then, ETHA will definitely, have basically a fundamental kind of function to support these kind of DeFi project and give access to the, I said before, the retail customer to participate in the best way, right? So that's really something which is super important and super fundamental in the DeFi and in the industry. So I guess that's why we are so excited about the project. And also ETHA have a fantastic team working on the real product, and we really like the team and like the product. So that's why we are so bullish on the project, and we are super excited about it.
Thank you, James. So to close the conversation, I'd like to ask Chester, what expectations do you have, in the future with this relationship with DFG?
Well, that's a great question. So DFG has been a great supporter since the very beginning, because initially when we started talking to a lot of people actually about the overall product, they didn't really understand the problem that we are really solving. They just thought it's just another yield farming tool. But once we broke it down and we show how the algorithm works and the problems that we are addressing, they immediately saw the value and were supporting us from the day one, before there was even like a lot of backers. And the most important aspect why we really welcomed DFG was as well that beyond capital, they're giving us very strategic value overall in how we can expand and better the protocol, which is much more important than capital. Nowadays, capital is not enough for projects, I would say. It's always very important to have some strategic backers that can add value and help you grow. And yeah, one point that James just mentioned as well about the product that I didn't mention in this call is, of course, pools. Basically, it's another product. It's a solution where we provide people a way to supply a stable asset, but earn the yield in a volatile asset. And this is a great solution for risk-averse investors, because that way your principal is protected from volatility. However, your yield is exposed to volatile assets. So, and we think it's a great solution to have additional exposure to some other funds while holding on your principal. And we are as well excited to launch that soon and share that with the world and see how they react.
Great. So thank you very much, both of you, for sharing your time with us and for allowing users and followers to have a better understanding of what you both do. Any last words before we leave? Chester?
Yeah, I want to thank you guys, Alex and James, I mean, for being great supporters and for having me, of course. And I'm looking forward to have more talks like this once we have some updates and we let the world a little bit know what is going on.
Great. Thank you, Chester. How about you, James?
Yeah, first I want to say thank you, Chester, for joining the DFG Talk, and for the audience. And hello, this is James. And if you have any problem or questions, please don't hesitate to reach out to me or Alex. And we are happy to talk with you guys about anything in the crypto industry.
Great. Thank you very much. This was our talk with ETHA DFG Talks. Have a good day, everyone. Thank you for joining us. Bye-bye.
You too, guys. Thanks. Bye-bye.
Bye-bye.